Hey, hello everyone. This is Edna Keep here, and today I have with me one of my students, Jared Kneitel. And Jared is all the way from New York, and I met him at an M1 event, which some of you are familiar with because I've spoke about Rock Thomas and all that, and his background's as a lawyer. He's very detailed and analytical. And just the other day, I was chit chatting with him because I had some questions. And during the topic of or during the time he was answering it to me, I found out that he knows even more than I thought he did. So I invited him to be on my call so that I could share that knowledge with you because he is a wealth of knowledge. So welcome, Jared. Tell us a little bit about your background, what got you interested in real estate, and what you're focusing on now.
Thanks, and I appreciate being here. Thanks for having me on the call. Yeah, so my background originally is as an engineer, and then as a patent attorney, then as a criminal defense attorney internationally, where I worked in an international war crimes tribunal representing a man accused of war crimes and crimes against humanity. And then as a criminal defense attorney here in the States, then as an adjunct professor of law, and then doing some work down at Guantanamo Bay for the detainees down there. Worked at a solar power startup and most recently at another startup. And through all this, I had a background sort of like underlying all of that was doing work in investing and particularly in real estate investing. And then through meeting some of the people in M1, got really into real estate investing. So that's where the journey has taken off. And my wife and I were thinking, all right, well, we are kind of tapped out some of our personal funds. So what other money do we have other than looking at other people's money? And then we realized we have a whole bunch of money sitting in our retirement accounts. And then we're just trying to figure ways to tap into that money, to use that money for real estate investing. And then we found out there are a couple of really great vehicles that I now teach about that we can use to invest in real estate. So everything from creating promissory notes to funding fix and flips to buy and holds, you name it, we're more or less getting involved in it now. So that's where we are.
Very interesting. So the reason I had reached out to Jared is we are raising capital to fund our Airbnbs. And one of my clients in the States reached back to me and she said, Edna, I want to invest using my IRA. And I go, oh, well, I don't know how to do that. So I reached out to my partner in Rochester and I said, are you familiar with this? And he said, well, not really. So I reached out to Jared and I said, okay, Jared, I need to know some information about how my client, and it is a US-based investment, so it ended up working well. So he kind of walked me through the steps, and that's when I found out that he actually shares the knowledge that he learned. So tell us, Jared, like what are some of the things that you invest in with your, is it 401k and IRA both?
Yeah, so let me just take a step back because the really interesting thing is that a lot of the traditional brokerage houses where a lot of people have their mutual funds in for IRAs, 401ks, they have absolutely no legal obligation to tell you that you can use that retirement money to invest in real estate. Because of course, if as soon as they tell you, then you're actually going to take some of their money away from them and start investing in real estate. There's just been just a huge marketing ploy over decades where we've been sort of inculcated into thinking, and by people who don't know any better. Like my parents were always saying, just save, put money into 401ks, IRAs, invest in the stock market, mutual funds, and then you'll be good. Well, some of that wisdom is changing. And of course, like I was saying, the mutual funds, the brokerage houses won't tell you that you can use this money, transfer it out tax-free without any liability, and do a rollover, and then you'd be able to use in a different investment vehicle to use that money to invest in real estate. So yeah, so we've been doing, like I was mentioning before, fix and flips, buy and holds, and also getting involved into JV and syndication deals.
And you know what? I know that that's a fact, Jared, because I was a financial advisor for 15 years and I didn't know. So I was one of those didn't know people. It wasn't that I didn't tell people, didn't know it was even a possibility because I was trained by the mutual fund companies. So that's all I knew. That's all I knew. So when I had my eyes open to real estate, as most people know my story, I couldn't even sell mutual funds anymore. So it's really interesting to see all the stuff that you've been able to do with that. So
and a lot of people get really scared. when we speak about using retirement money to invest in real estate, and also just people get scared to say to speak about investing in real estate in the first instance, because of course, like people have been saying their whole lives the only way to do it is to invest in mutual funds. So a lot of really wealthy people in Canada and the United States generate a lot of their wealth through investing in real estate.
Exactly, and I can kind of understand why it's a game. Mutual funds, why would they train you anything on real estate? But I actually learned from some fellow real estate investors who were investing in real estate besides what they were offering their clients, which were mutual funds, and then they couldn't offer real estate because it was against what we were trained and what we were selling, what we were licensed to do. So it wasn't until I stepped out of that whole arena that I learned. So what took you down the rabbit hole into finding out more and more and more about this stuff?
Yeah, so that's a great question. So it certainly has been a rabbit hole. I spent countless hours researching this, speaking to accountants, other tax professionals, and a lot of people just didn't know. They had no idea what I was talking about, quite honestly. So then I had to really put on my lawyer hat and put out on my research chops and just figure it out. And then found some really great resources, and now taking all those resources, all the information I've learned, and I'm now sharing that with other people and teaching other people about that. So the rabbit hole has taken me down first, where one of the industry protocols is to move money from, let's say, Fidelity, which is where my wife and we had our money, into a self-directed IRA as a custodian. So it's one custodian to another custodian transfer. So there's no distribution, there's no tax penalties for doing that. So for example, equity trust, which is where we had some of our money initially, and then we've moved it out since. So with equity trust as a self-directed IRA custodian, you can do a variety of different sort of real estate deals through there. However, it's very limited, and they're a custodian, and they're going to take a lot of money from you, funds coming in, funds coming out. It takes a while to get money moving, and they're marketing. So they're making their money by having assets under management. So they're going to be marketing to a lot of people, and I fell into their marketing trap, unfortunately. I'm not saying that they're a bad company in any way. They have some really great products and some really great information.
Well, that's what everyone does, markets their own stuff.
Yeah. And that's exactly it. So then some of the other vehicles that I then subsequently found out about, which are vastly superior, I'm talking vastly superior, are the vehicles that I teach about, which people don't know about because there's really no incentive for people to teach about those, because they're individual to the individual person, and they're not going to spend any money for a marketing budget because it doesn't do any benefit to them, which is great, because then it means it's actually going to be a really great product.
Yes, because their job is kind of like the trustee. They're just holding the money, right?
That's right.
No attachment to it. They give no advice with it, kind of like our Olympia Trust. They even people have to sign off saying Olympia Trust is not responsible for the choices you make with your money, right?
Right. Yeah. So then for the investment vehicles that my wife and I are in, I am the trustee of that vehicle. So I am responsible for making all the decisions. I'm the fiduciary, as compared to, let's say, equity trust and the self-directed IRA situation, where they're the custodian of the funds and they're the trustee of the funds.
Mm-hmm. So I imagine there's different steps a person has to go through to do that. Is that complicated? Is that something people can do by themselves, or do they need help?
They need help. I have spent a lot of time speaking to different accountants, different groups that set up the special retirement vehicles, and spoken to, I don't know, at least half a dozen people to figure out which ones would be the best ones, which ones have the best plans, which have the best customer service, which can answer the questions the most quickly, and just the best. So I am very confident that I have found the best one, certainly the best one for me. And people do need help. I am not able to do it by myself, even though I'm an attorney and have been trained in doing these sorts of things, and I wouldn't do it by myself. So I definitely went outside to be able to find the best people, the best resources to be able to do this.
Yeah.
Because otherwise I could sit there, for another several months writing
exactly.
work when someone else has already done it. And I'd be very happy to pay them the fee to be able to set up my plan for me.
Well, and you know what? I would too. I'm a big believer in shortcuts. Like, why would I go and learn everything Jared learned when I can make a phone call and say, Jared, tell me what to do? And I just want the short form, because like my pea brain doesn't hold all that information that you guys, delve into. And really, you can't with anything you do. You can't, know everything. You need to start and do one, and then you start branching off. Like you said, you started out in fix and flips, using your money for fix and flips, right?
Right.
What kind of return did you get on those?
So ranging anywhere from, let's say, minimum 12%, 15%, somewhere in that area.
Okay, cool.
Yep.
And then, so you did fix and flips. What are some of the other options that you're able to use?
Buy and holds, and getting into joint venture and syndication type deals. So, and that's a really great question. And this really is a very important point, because in the self-directed IRA vehicle, which again, Billy and I, my wife and I, are moving that money out of those vehicles into the vehicles that I'm now teaching about, we're able to get into the joint venture type deals, because in the self-directed IRA type deals, in that vehicle, if there's any debt related to any investment, you're going to pay big time. I mean, we're talking about serious amounts of tax, and it's scary that I almost fell into that trap about getting involved into a real estate deal, funding out of a self-directed IRA involving debt, leverage, and then I was going to I was going to be forced to pay a big amount of tax. Unfortunately, I didn't get involved in those deals. And then this is part of the rabbit hole where I then started doing a lot of the research into the other vehicles that we're now in. So we're able to use debt in those deals, a mortgage, like for a buy and hold, where we own it, or getting involved in a deal where there's any other sort of leverage, like a JV or syndication type deal.
So in your IRA and 401k plans, you can actually own rental real estate?
Yes.
Okay. So that's something we can't do here. We can mortgage, but say for example, if I'm trying to fund an apartment building and I'm using registered funds, which is like in our area, TFSA or RSPs or LIRAs, they cannot have an ownership position in the project. It can only be a loaner. So they can loan us funds through the registered plan, but if they want to be an owner, they have to have cash.
Yeah, one interesting thing, just a caveat here in the States, is that there's what's called prohibited transactions. So you can have a direct benefit to owning the property. So if you own a rental property where you're treating it like an Airbnb, and if you stay in it once, then that's a prohibited transaction. And if the IRS were to find out about it, then they would disqualify that money and then have all that investment say that it's an early withdrawal from the retirement account, have to pay the early withdrawal penalty, which is 10%, and also that additional whatever money was in that vehicle then has to be added on top of your adjusted gross income for the year. So you have to pay additional tax penalties for that.
What if they paid to stay in that Airbnb? Sorry,
what?
What if they paid to stay in that Airbnb?
Well, if I, let's say, for example, no. So, I mean, because you're tricking me up. That's a great question. I think that the answer to that is still no, because it still has to be an arm's length transaction. I'm not sure that paying for it would be considered that. I'm not sure.
Thinking at some point, in people who invest in Airbnbs might not even have the actual address. So I guess how could it go back, right?
Yeah.
I mean, hard to say, but maybe our client would end up in Rochester at the Mayo Clinic and end up in one of our places that she inadvertently invested in and doesn't even know it. But I don't imagine something like that would ever be found out, because it was never in the intention, right?
Yeah, no, I think that's right. So I think that there has to be some sort of intentionality behind it, where you're actually intending to skirt the law. Yeah. If there's one property that the investment vehicle or the group owns, like one Airbnb, and then you just happen to be in the Airbnb, then that might be a problem. If there's 20, 50, 100, then, probably there wouldn't be a problem, I don't think, because it's like there's no intentionality behind it. And so you then have to, it might be unruly to then have to go look through your list of which properties the group owns compared to this list of the Airbnb properties, and then just cross match them to make sure.
Well, it reminds me of, hearing that, Canada has made cannabis legal now, and US has not. And I've heard stories about, if they even find out you're investing in cannabis, they won't allow you across the board and think, well, most people don't even know what they own inside of a mutual fund. They could own cannabis inside there and have no clue. So I thought that's kind of dumb, but I think
Yeah.
that was, they don't make any of the decisions. So it would be a different story, I'm thinking.
Yeah.
So
one other point just in mind, that's as we're speaking about investing in a rental property, for any of the returns that are coming back from any of these funds from the retirement accounts, they have to go back into the retirement accounts. So it's not like you do an investment and the money comes back as cash into your own pocket. It has to go back into the retirement account.
yeah, that's the same that we have
Yeah.
here. Yeah, there's no way around that.
Well, there are. I do have a couple strategies to not avoid it. It's just I do have a couple strategies that we can talk about that I'm actually going to be speaking about in the course about how to be able to ultimately get some of that money out, should you choose.
Oh, interesting.
Without penalties. Yeah.
So tell us about your course then, Jared. First of all, how would people connect with you to learn more from you? And then a little bit about what you teach in your course.
Yeah, perfect. So the course, you can find out more information about it at wealthy401k.com. And it is a 4-week course, and we're going to cover a lot of information. We're going to go through a lot of my personal experiences, so you know that you're actually speaking to someone who has actually done it and lived it. And we're going to be speaking about the different retirement vehicles like the self-directed IRA, the other investment vehicles that I am now using with my wife to be able to do these investments, all the tax traps, the other major pitfalls associated with investing in these sorts of vehicles, how to avoid them. They're really easy to screw up. So especially if you don't know what the traps are. And like I was mentioning before, I almost fell into one of those traps. Unfortunately, I was saved from it. So I'm of service to you to be able to say, like, don't fall into these traps. This is exactly what they are. This is how to avoid them, how to set up your accounts, the order in which to set up the accounts, the order in which to fund the accounts, and other strategies that you may want to use. And also speaking potentially, if you are thinking about how much money you may have in the retirement accounts, whether it makes sense for you to cash out the accounts now, or like I was mentioning just before, to wait to see if it makes better sense to hold on to some of the money using some of the strategies that I'm speaking about to then be able to take some of the money out, have it as cash, personal cash, without any tax penalties. So we're going to be covering a lot of information, and also how to set up some of the deals, like if through promissory notes or the joint venture deals or fix and flips, how to get this all set up and how to track your money. So that's what we're going to be speaking about.
Okay, so and then how's your course laid out? Is it online? Is there personal coaching with it? Is it recorded? How does that work?
Loved your questions, Edna. Yeah, so right now, this course is new. So what we're going to be doing, we're doing a first group for the very first 10 people as the founding members who sign up for the course. And there's going to be a lot more personal attention for those first 10 people. So included with the course, it's going to be live video calls for the 4 weeks. And each person, as the first 10 people that join, I'll offer them a free half-hour phone call with me to discuss with them about their situation and what makes the most sense for them in terms of their investment vehicles and investing.
Okay, perfect. So I'm assuming that the first one's going to be live. Are you going to record that for the second one?
Yes.
Okay, yeah, that's how I did mine. I recorded it. I did 4 different sessions live before I was settled on the recording. And you might end up actually finding the same way, yep, because every new group is going to come up with some new questions, and then you're going to have to change it anyway. So instead of setting it up, you might want to consider doing that, because
I'm excited. I'm really excited to speak to everyone that is going to be, everyone who's listening here, everyone that may have questions, because the questions, so I was asked questions, or I was asking questions, and then I got a lot of really good answers, which then led me down these rabbit holes, which then led me to getting some really good, solid answers. So the more questions that come my way, and look, we're all going to grow and mature as investors using these vehicles. And the more that we mature, the better we get at it, and the more answers to the more questions that we have. Of course, we're only going to rise the level of questions that we ask. So very excited about all the questions that are going to be coming in.
Yes, and sometimes the government changes rules on us, right? So we have to stay on top of that kind of stuff too. I know that was always one of the well, I guess it was why when we were financial advisors, we had to do our continuing education because there were those changes. So whoever was our trainer would pull us together like once a quarter and say, okay, these are some of the changes and some of the stuff that's coming down. So, well, you know what? That's very, very interesting. I get so much out of these calls. My mind just expands. It's amazing. So I love it. I'm very interested in learning more myself. We're starting to do more and more work in the US. So of course, that kind of stuff's going to be very, very helpful to see. So tell everyone again how they connect with you.
Yeah, so it's wealthy401k.com. And you can send me an email as well at Jared, Jared, at wealthy401k.com.
Okay. And when does your course start?
The first launch, we expect it to be for August 24th.
Okay, perfect. And first 10?
Yep.
They get what? What's the price on it?
The price right now is $297, which, you know, I've been speaking to people about how to price it. Some people are saying it needs to be $1,000 because of the value that I teach, and also the amount of money that you'll end up saving using the vehicles that I teach, as well as getting the money out of the stock market. You can move all or some of the money that you have in your retirement accounts. You don't have to do a full carte blanche moving of all your funds in retirement accounts. It can be partial. So however much money you want to move over, and then you can move over more later. It's totally fine. Yeah, so excited to speak about it. You asked another question. I just blanked on it because I just got excited about that.
Got it all. August 24th start date, 4 weeks, $297.
Yes, $297. Yeah, so $297 right now. The price is going to be going up. Become a founding member for the first-time people that join, and it includes the 4 weeks live video calls, and also a half-hour free coaching call with me, and very likely there'll be more free coaching calls with me because I want to make sure that people get their vehicle set up and get involved in their first deal. So that's my intention, my aim for the first founding members that sign up for the course is to get them set up with their investment vehicle and get them into their first real estate deal with their. That's my intention.
So $297, August 24th, 4 weeks. Learn how to maximize your 401k and IRA, right? Both.
Yes.
Both. And be able to take that money and invest in other things besides stocks and bonds. They have real estate, Airbnbs, that sort of thing.
Just one quick note of clarification, just so that people aren't any misimpression. This we're talking about 401k or 403b money that is from a prior employer. So if you're presently employed with an employer that you have a 401k with, that 401k money will not work for this. You have to wait until you terminate service with that employer. So it's an IRA or an old 401k from an old employer.
Good point. Good point. Yes. So that would be, so in Canada, we've got LIRA. So LIRA is what people, while they're still working, they can't touch. Once they're gone, they can do. Is there a retirement plan that they can touch before they leave their employer? Like an RSP in Canada would be?
Well, it's the only way that I know that someone can actually touch any of their funds with a present employer is to borrow the funds from that employer. Typically, they have to be with an employer for a certain period of time, and then they have to pay the money back to the funds, the employer's fund. And especially if they terminate service with the employer, then they have to pay that money back right then and there. So yeah, so that's the only way that I know of it in the United States. If there may be other ways, this is the one that I know.
Okay, perfect.
Yeah.
Well, awesome. Well, thank you so much, Jared. I am very excited to share this with everyone. And I was very excited to even just get the overview from you when we chatted the other day. I was glad to share this with my audience. And we'll definitely stay in touch because I'm going to learn more as well. And I look forward to sharing this with everyone. Do you have any final comments?
No, that's it. Just excited to be of service, and check out wealthy401k.com.
Okay. Thanks very much, Jared. Take care.
Ed.
Yeah.
All right. Bye.
Bye-bye.